We've got a lot to talk about, but I have to get your view on the macroeconomy. What scenarios are you planning for? Do you think a recession is inevitable?
I'm actually more optimistic. So I'll caution it with that we are a B2B company, so we tend to see corporate spending. Our customers in turn may be B2C, but we don't directly go to consumer. So in the B2B, we see the spending environment quite robust. We see our demand signals, we see our pipelines, we look at geographies, we look at industries. And part of it may be that technology is the answer through these problems. When you look at supply chain, inflation, labor demographics, interest rates, technology offers you a way to scale without necessarily increasing costs that are linear or worse than linear. And so I think that that is why technology spending, I believe, is going to remain robust I'll call it all moderate scenarios. If there's something extreme, that's different, but I don't really expect that.
Are you planning for extreme scenarios? I mean, do you have to plan for extreme
We
scenarios?
always plan a bunch of scenarios, but plan is different. That's a plan on paper.
Yeah.
Which ones do you expect to play out? You would say there's a middle, there is a more pessimistic, there's a more optimistic. None of those are the extreme ones.
Well, it's interesting because we're hearing, for example, the CEO of ServiceNow just gave a very pessimistic forecast. Then you have Snowflake with a very optimistic forecast. Like, who's right? I mean, you're optimistic.
I'm optimistic. So I'd say that I see technology spending as remaining above GDP growth. Whether it's 3, 4, 5 points above GDP growth, somewhere in there is going to remain technology, including in Europe, is our view. So we are more optimistic than pessimistic, for sure. And that's why in April, when we could see some of these headwinds that we're talking about were there in April. We did forecast that we would see at the high end a mid-single-digit revenue growth for ourselves at constant currency. So I'll put that to the side.
So how is this all impacting your strategy, your cloud strategy, your growth strategy looking ahead?
It's actually, I think, reinforcing the play we called. So 2 years ago, we called a play on hybrid cloud and artificial intelligence. We see hybrid cloud as helping our clients through these issues. We see AI is really helping on the productivity issue. When you look at AI, $16 trillion of productivity unlock over this decade. And you look at hybrid cloud, $1 trillion opportunity. All our clients want a few public clouds. They still have their own on-premise and private cloud. So when you look at how do you help your clients navigate through all that, really give them a technology roadmap that lets them succeed in the face of sovereignty, in the face of resilience, in the face of supply chain issues. Both these technologies are turning out to be great, great opportunities right now.
Let's talk about the supply chain. Are you seeing relief? How much longer does the supply chain pain last?
I actually may be a bit more pessimistic on that than optimistic.
Okay.
I think supply chain resilience is a real fundamental issue that's going to go on for a couple more years.
And what are the impacts of that?
So I think the impact on the consumer side is obvious. It's going to be higher prices, and you can see that. On the enterprise side, I think that the supply chain is going to cause more delays, more people sort of wondering about where is my alternate on supply chain. But it's not a simple issue. That is what I think nations and leaders have to wake up to. It's going to take 2-3 years for us to go resolve this. And that is why I sort of say this is not a simple issue to get resolved.
So you're saying it's going to get worse before it gets better?
No, I think we may be at the worst of it right now. But when you're at the worst, it doesn't get better right away. That's going to still take a couple of years.
So obviously chips are in short supply, including, we've been following the CHIPS Act. Looked like there was bipartisan agreement that this would get passed. Still hasn't been passed. We spoke to Commerce Secretary Gina Raimondo on Bloomberg Television. Take a listen to what she had to say.
Yes, it will get done. This is, at this point in the negotiation, unfortunately, politicians look for leverage. And while it isn't right to play politics with national security, that's what I think is happening. In the past 2 weeks, we made huge progress. We were closing out issues, finding compromise. So I think everyone just needs to come back today, get back to work, and commit themselves to getting it done in the next few weeks.
So she sounds like she's trying to be optimistic, but she's also clearly frustrated. I mean, you've got companies like TSMC spending $100 billion abroad to increase capacity, and we can't even get a $50 billion bill passed. What's it going to take? Have you been talking to lawmakers? What's your sense of the sentiment here?
We have. So we have been talking to lawmakers on this issue on both the CHIPS Act and USICA for the last year. We are very strong believers that these are good bills for United States competitiveness. We believe in the sake of both national security, but also business in general. These are good things to get done. I think the CHIPS Act is essential.
But will it happen?
I believe the CHIPS Act will happen. I can't predict exactly when it will happen.
Okay.
And which vehicle, will it be part of USICA or part of its own? We are not experts on that. What we can say is that we are happy to put our voice behind the CHIPS Act. We are happy to call senators on both sides. We believe there is bipartisan support actually for these acts. And that is what we are willing to go ask for the support.
Now, you just wrapped your 5th acquisition of the year. With these depressed valuations, is that making you more open to more M&A?
Short answer is yes, but it's not a question of depressed valuation. So M&A has been part of our strategy. About a year ago, when we set out on our investor day, we said you should expect us to do $3 to $4 billion a year in acquisitions in a normal year. Now, you can always, when valuations are right and you can get the most attractive target, and it is going to be accretive to us, then we'd be willing to also lean in and borrow ahead from what we can do. You saw a great example of that with Red Hat 4 years ago.
And you just named a new CEO there.
And it has played out for us. And we have paid down the debt we took on to acquire Red Hat. So, but things like that you can do once in a while. But you would absolutely expect us to continue to be acquisitive as we have been.
So are you saying we could see a bigger acquisition like that again, or are we going to be seeing smaller?
The smaller ones are a sure thing. The big one will depend upon both the attractive opportunity. It has to be something that is accretive to us, that aligns with our strategy, and that creates significant synergy. So if you get all those things in play, maybe.
Where could you see some synergies? Like what areas are you eyeing?
The areas we're in are going to be straightforward. Doesn't matter small or big.
Yeah.
The areas we're on is in software and in consulting. And in both the areas within that, in terms of technology, is around hybrid cloud, around security, around data and AI, and automation, all of which play to the current economic themes of what's going on around the globe.
So speaking of Red Hat, new CEO just named, what changes will this bring?
This doesn't really bring any change. This has been planned for a while. Look, Paul Cormier gave us 4 years since we announced the acquisition. He's not gone, by the way. He's still here as chairman. And Matt has been in his wings for a long time. Matt has worked for Paul for almost 16 years. So we shouldn't expect any significant change. And Matt was the leader behind our OpenShift strategy, behind containers for the last 3 years. He's been leading products inside Red Hat. So you should expect more of the same, more intensity, more of a doubling down on the winners, but not a significant change.
So last quick question. Obviously, you've been at IBM for so many years, but in this CEO seat now for a couple of years and through a pandemic, what are your goals for, let's say, the next 5 years?
Number one is relevance to our clients, and that comes through the areas we have picked. So we have picked our areas, and we're going to keep doubling down on them. That results in revenue growth for the company and results in cash flow growth for the company. That's a return to our investors. Then, apart from that, my goal is clear. We want to build a platform that is going to stand the test of time. The mainframe was a great platform. WebSphere, which was Java, was a great platform. It's time to build the next platform, which is going to be based on the hybrid cloud technologies from Red Hat, but also a lot of what IBM is innovating around that. That will provide a stream of revenue and relevance for 2, 3, 4 decades, maybe.